Welcome back. Let's talk about the markets and the way forward. Vikas Khemani, founder of Carnelian Capital Advisors, is now with us on the show. Vikas, morning, and thanks for joining in. There is a lot of trepidation going into 2023. Many believe the bulk of the big gains are behind us. From here on, next year could be a year of moderate gains, and it all boils down to the kind of stocks that you select. Can you tell us the top-down macro setup as you see it for the Indian markets, and what's the best approach?
Yeah, hi, Rima. I think, I echo a similar kind of sentiment that, we have reasonably rallied in last few months. We've been, sort of quite positive about markets, since July, August. And, good run has happened. And as we get into 23, while the India story continues, the growth in the banking sector continues, growth in automobile sector continues, overall broader earning outlook looks very, very reasonably smooth. There might be some headwinds coming from global setting of a little bit of slowdown in the demand because of the ongoing interest rate rise. But that's going to have a limited impact. But if I were to look at 23 as a year, there will be events in terms of state elections, setting on the stage for 24 elections. So it will be a sort of mixed year. It should be definitely a positive year. But I guess one has to keep in mind the overall environment. Good part is that the interest rates are kind of, in my opinion, likely to peak out very soon. Inflation has peaked out. So I think those things will be tailwind. The headwind would be a bit of a demand slowdown in the developed markets. But as far as India is concerned, I think we are reasonably well placed. Our domestic demand looks reasonably good. Investment cycle is picked up well. Manufacturing is kind of doing well. So one has to kind of navigate this, tailwind and headwind kind of environment. Net, I remain quite sort of positive on the markets. And at the end of it, it boils down to sector selection, stock selection, and it is always the same. And to make money, you will have to keep looking. So sector will do well where the risk reward is good, and that's how one has to always navigate the markets.
All right. Hi, Vikas. Good morning, and thanks for joining us. So, like you said, it's going to be about sector selection, stock selection. So take us through what you are really selecting at this point. And like you said, global demand, could see some pressure even continuing into next year. Would you avoid all of these global-facing companies?
So I think, again, it's very, very, sector-specific one has to look at. But broadly, right now, we are very bullish on banking and financial services. We think that the cycle has just begun, and you will see, 23 also would be a good year in terms of credit growth, in terms of profitability growth, some of the write backs from the NPAs coming. So that would continue to be the, I would say, leader and the star performer. Automobiles can continue to do well because we are coming out of a long cycle of no demand or low demand and supply disruption. So now the volume growth and the earning growth should be decent. I think manufacturing oriented players where we are seeing big shift from China coming towards India, even if they are globally placed, but the shift is helping in terms of creating the demand environment, are again well placed. Capital goods, which is focused on the investment cycle, is well placed, especially from an Indian perspective. So I think these are the 3-4 broad blocks of the market which will outperform market significantly. IT, per se, can remain sort of moderate growth to while a demand environment so far looks pretty decent, but what happens is the stock market sort of looks at the perception of the impact on the demand because of the global slowdown. So I think companies will do well. Stock market performance, I have no idea how it will pan out. I think most companies should deliver between 12 to 15% earning growth, which is a very good growth for a sector of that kind. So broadly, I think net I see reasonably positive market, reasonably a good market. But there will be events like state elections, news around the 24 elections. So all those things will also kind of color the market, and one has to be cognizant of that fact.
Particularly on IT, you said that we should expect about a 12 to 15% type of an earnings growth next year. But what about the PED rating? Do you think the worst of the PED rating is behind the Indian IT names? The downturn that we've experienced through 2022, Do you think we are in the final stages right now, and therefore it may make sense to do a technology SIP type of investment from now on for the next 6 months?
So in 21, I think this companies grew as very well, and that got re-rated, and maybe probably got stretched on the upper side. And we saw concerns around the demand building and stock sector got de-rated, while the earning growths have not kind of really disappointed in a big way. Might this small deceleration happen, but not a big deceleration. Order book intake remains reasonably strong. I think attrition issues were kind of clouding a lot of worries, which are settling down. Currency tailwind is helping. So some of those they are positive and they are sort of a bit negatives. So I would say that technology as a sector will do well. It's a non-discretionary demand. Companies will have to spend. Now the growth, whether it will be 12%, 15%, only time will say. If it ends up being on the 15%, it will deliver well. If it is 12%, probably we'll see that kind of returns coming through. But I would say that given the fact that it has a 3-4% dividend yield profile and promising sector, one should definitely invest.
Okay, one should definitely invest. Vikas, you're sounding very positive. The other space I want to talk to you about is on the entire consumption theme, right? Because there's such a divergent trend playing out there. On one hand, we are talking about commodity costs coming down, which is a good thing. But of course, the demand the demand recovery has not quite been linear. So while urban is doing well, rural is still quite not back at pre-COVID levels. Do you think this is something that can keep the space under pressure for a while?
So I think it is possible. I mean, demand right now is a bit slow, especially on the discretionary side. And so probably consumer staples might do well, but the stationery side will be little slow as we see in this quarter, and probably might remain so 1 or 2 quarters. And on the top of it, most of the companies are reasonably premium value. So I guess to that extent, stocks might not do well or might kind of consolidate in a narrow range. So we think that there will be the right time to kind of look at it, because as India goes through significant scale up in the per capita income, discretionary spend always goes up, and it will go up. But in a shorter term and a medium term, it might sort of remain a bit sideways. But there will be period of time when one should look at, and there are companies still in that space also looks interesting. So it's again you really can't broad brush. You have to kind of look at the company business model, the risk reward, valuation, all those things. So, but net long term perspectives remain positive. Medium term, I guess there should be some consolidation.
Given the risk reward, do you think it may make sense to allocate more money into debt next year?
I think as the interest rate peaks out, of course, some amount of money will, as we get closer to 7.5-8% kind of rate. You will see money will flow there, especially in the bond market. And I guess somewhere around middle of next year, late next year, at least, if not anywhere else in India, I believe that the environment will become for interest rates cut again. And as that happens, you can see a bit of a gain coming on the fixed income. So it really depends on the individual profile. But definitely, I think debt allocation is likely to go up, and into the next year. So especially from a sort of preparing for interest rates cut in 23-24, late 23 or late 24.
All right, Vikas, we leave it at that today. Thank you very much for joining us with your outlook on the markets as well as some of these individual sectors that you like. That is Vikas Khemani telling us that we might see some pressure in the global markets continue into the next year as well. But for India, the impact might be limited. He's sounding quite positive on a lot of these sectors as well. But with that, we're going to get into a short break now. When we come back, we're going to get you some more market action and opinions. So stay tuned for that.